Every single morning, millions of Americans pull into a drive-thru, open an app on their phone, and enthusiastically scan a barcode to buy their daily iced latte. To the average person, it's just a convenient way to get a morning caffeine fix and earn a few loyalty points. But behind that friendly green logo lies a financial loophole so massive that it has turned a coffee company into one of the most powerful financial institutions in America. Starbucks is not actually a coffee shop. Functionally, it operates as a massive, completely unregulated shadow bank, and you are currently giving them an interest-free loan. To understand this, you have to look at how traditional banks actually make money. When you deposit cash into a savings account, the bank doesn't let it sit in a vault. They take your cash and lend it out to other people for mortgages or business loans, charging heavy interest. In exchange for using your money, the bank legally has to pay you a tiny percentage of interest back, and they are heavily regulated by the government to make sure they don't lose your life savings. But in 2009, Starbucks launched a mobile app feature that accidentally broke the entire financial system. They realized that if they offered customers a few free digital stars or discounts, people would gladly preload cash onto the app instead of swiping a credit card at the register. It sounds like a basic digital punch card, but when you look at the math, the scale is absolutely terrifying. At any given second, Starbucks is holding nearly $2 billion of customer cash loaded directly into its digital wallets. To put that into perspective, roughly 85% of all commercial banks in the United States hold less than $1 billion in total assets. If it were legally classified as a bank, Starbucks would rank as one of the largest financial institutions in the country. But because they are legally classified as a restaurant selling gift card credits, they get to break every single rule of banking. First, they face absolutely zero risk of a run on the bank. If every customer panicked and tried to withdraw their cash tomorrow, traditional banks would collapse. But Starbucks app balances are strictly non-refundable. You can never cash out. Your money is permanently trapped inside their ecosystem. Second, they don't pay you a single cent of interest for holding your money. Instead of a financial return, they pay you in a caramel macchiato. Starbucks takes that $2 billion of free capital and freely uses it to build new stores, fund massive global expansions, or invest it directly into high-yield treasury bonds, generating tens of millions of dollars in pure interest income using your cash. And then comes the ultimate free money glitch, breakage. Every single year, a predictable percentage of people lose their phones, forget about their accounts, or leave tiny balances of 35 cents on an old digital card. In a traditional bank, abandoned money legally has to be turned over to the government. But for Starbucks, it's pure profit. Every year, Starbucks pockets over $200 million in unspent card balances. Free money from coffee that nobody ever drank. The gap between an American customer mindlessly tapping a screen at a cash register in Ohio and a Wall Street executive tracking a multi-billion-dollar interest-free investment portfolio in Seattle is a massive financial chasm. One sees a convenient shortcut to a morning routine. The other sees the most brilliant consumer finance banking system ever engineered. Both are fueling the exact same machine. So open up your phone right now and take a cold, hard look at your account. You aren't just keeping a balance for convenience. You are officially an investor in an unregulated shadow bank, and you're letting them play with your money completely for free. Check your Starbucks app right now. How much unspent cash are you currently letting them borrow? Drop your balance in the comments below, and let's see which one of us is funding this coffee giant the most.